I'm going to show you guys how I trade the ICT turtle soup model. So currently I am in a trade on the NASDAQ. I'm looking for price to draw down into this low, which is a 10-hour trade. So it's about close to 100 points to the downside. We do have this swing low as well, which I do think price is going to head towards. So I'm looking for this swing high right here to remain intact. I don't want to see price go above that. You can see my entry right there, 18,024.50. I don't want to see price go above this high where I have this little red area. And I want to see price draw all the way down to this low. So that's the idea I'm going for right here. I'm going to walk you guys through the framework behind this. The higher time frame analysis is the most important. So if we go to a 4-hour time frame, this is what the 1 to 4 hours what I like to use to frame a higher time frame bias. You could use lower time frames as your higher time frame bias, but it is important to have a higher time frame bias. So we have this swing high over here. You can see that price swept out buy side liquidity. What did it do? We have a big wick on this level, then it displaced down. So this displacement down is important. This up candle is going to be an order block. You don't see a fair value gap in here, but there is a fair value gap on the lower time frame. My focus right here is this breaker. So I'm going to extend out this breaker. And the reason this breaker is important to me is because price took out buy side liquidity and then it displaced down. And then there is relative equal lows in here still. So I'm going to show you guys what I use to kind of give feedback from the algo where I believe price is likely to go. So if I go down to a 15-minute time frame, remember this is the 4-hour breaker. So the shaded area is the 4-hour breaker. If you notice what price did down here, all it did was retrace back up, focus on this high right in here. All price did was return above this previous high. So I'm going to get rid of the shaded area now. All it did was return above this black line, which is buy side liquidity. And then it displaced down, and then it set these relative equal lows. So we have another set of relative equal lows in here. Okay, if price was likely to head higher, I would not have anticipated for price to reverse above buy side here and then displace all the way back down towards this swing low. Okay, so notice how close price got to this swing low over here from the buy side. So we have the 4-hour breaker. Price returns above this old high inside that 4-hour breaker and then displaces down. And look how close it gets. Okay, if price was in a buy program, I would not have anticipated for it to get this close to this low before running for this high. So I think we do have unfinished business down here. Okay, and then price, what does it do again? It retraces back up. It returns above this swing high over here. So right now, this isn't the turtle soup model. I'm just showing you guys what I'm using to frame bias. Price returns above buy side liquidity again, and then displaces down and then gets close to the swing low as well. Now, we also do have some SMT, which I'm going to dive into in a second, which helps confirm that bias. But really, we have a breaker. Price returns into the breaker, returns above buy side liquidity, which is an old high in here, and then it displaces away from it with speed. Does the same thing over here. Returns above buy side, displaces away from it with speed. It sets these 3 relative equal lows in here. So these 3 lows are important. If you guys are interested in seeing more content from me, I do have a Discord server where I share my thoughts on the NASDAQ and S&P 500 every single day. So I do also cover crypto stocks. I cover the NASDAQ and the S&P 500 on the higher time frame, and also occasionally commodities and Forex. There is also a section where I do have an ICT course, which is 8 videos on covering how to trade ICT concepts from beginner to advanced. It's for any knowledge level. I have 8 videos in here. Originally 7, but I just added an 8th one covering the market maker model with some gems on how to figure out key levels to target. If you guys are interested in that, there's a 3-day free trial in the description. Okay, since I do have that bias, when price returns above this swing high over here, okay, pay attention to this up close candle. So now I'm going to remove this high. We have this up close candle in here. This is a bearish order block, so I'm going to make this level red. So this up close candle is a bearish order block. When price retests this specific up close candle, why is this an order block? Because it took out buy side liquidity, created a market structure shift lower with a fair value gap. The fair value gap is on the lower time frame. When price retests this previous order block with these consecutive up close candles and then breaks down lower, creating a fair value gap, and it breaks beneath these up close candles, okay, this forms another order block, which ICT classifies as a propulsion block. Okay, so we have a order block forming off of an order block, which makes a propulsion block. So now this swing high in here, so I'm going to delete some of these. This swing high becomes protected if and only if I am bearish. Since I am bearish, and since I do believe that these swing lows are likely down here, or at least at minimum this one, this is what I'm aiming for. This is just an easy target. In case it hits it, then consolidates. I don't want to sit in that consolidation. Okay. This is a propulsion block. So this high becomes protected because we have an order block that retested an order block, and we see displacement away from there. This also ran buy side liquidity. And most importantly, number one, this is because we have a bearish bias. Okay. So now going into a 5-minute chart, this blue level, I'm not anticipating for it to get hit because my bias is lower. We have big displacement down at 10 a.m. It starts actually it was a little bit before 10 a.m. We have 9:30, which displaces us down. And then we have 10 o'clock in here, which really started that acceleration up towards this swing high, which I'm anticipating a turtle soup to form off of that high. So what I like to do when we do have news events, I like to mark out the candle, which starts the news event. So we have 10 a.m. news over here. Okay. When we do have high impact news like this, I'm looking for it to take out liquidity, then target the opposing liquidity. So since I do have the bearish bias, again, I'm not anticipating for this propulsion block high to get traded to. And I'm also going to mark out key swing highs within this price leg from swing high to swing low. This is the propulsion block high. This is what I'm not anticipating gets traded to. This is the low I do think gets traded to. Any high between this high to this low in a premium is going to be significant. Okay, so when price returns above this swing high in here, I'm using the idea that price is likely to not trade above this propulsion block high. So if price is not likely to do that, it's only going above this swing high to take out buy stops and then go back down towards the draw on liquidity. So when price takes out this high, now I'm going to remove some of these drawings on the chart. We can go into the market with the idea that it's only going above this high to go lower. So a turtle soup is when price goes above this high, and I already have a bias that price is likely to trade lower. I am selling above this high. So I'm not waiting for a market structure shift. You can see my entry in here. I didn't wait for a change in the state delivery. I didn't wait for a market structure shift. Okay, originally my stop placement was up here, but as soon as price breaks above this swing high and then creates a change in the state delivery down, so notice how it creates the change in the state delivery right here, where we have this singular candle break to the downside. You could also wait for multiple candles to break. This is the more advanced version of the CISD, and this is really all you need if you do have a strong bias. Once we get that, I can trail my stop from this high to this recent swing high, because this high is likely not to get traded to. Why? Because price already took out the buy stops. So these are the buy stops over here that we're talking about. Price took out those buy stops, and then it displaced down, creating that change in the state delivery. Why is this significant? It's significant because we have a higher time frame bias. We're looking at a change in the state delivery at a key level, and since all that aligns, this is likely to hold this swing high up here. So I can trail my stop to that high. Okay, so why am I targeting this swing low? Again, that's just because of the higher time frame bias. So though I can use a lower time frame chart to get an entry, I could target a higher time frame level. So Dan, how do you know price is going to reverse right there though? What if it were to dig a little bit higher? Well, I like to use SMT as a confirmation of whether price is topped or not. So it's only important to use this once you already have a draw on liquidity. But pay attention to this swing high on ES over here, okay? And then this swing high over here on NQ. So I'm going to mark out the same exact high at the same exact time. So we have 929 and then we have 929. Notice how it makes a higher high on NQ, but then a lower high on the S&P 500. This is a cracking correlation between correlated assets. So when I see this, this is a sign that smart money is involved and price can reverse them. Okay, so once I see this above that key high where I'm already anticipating for price to reverse, this is the signal for me to get in. So here's what the aftermath looks like of that trade. You can see that price did retrace up, and I did pyramid in some more entries with a tight stop. I did take 2/3 of the position off just at this low, just because it was already a high RR trade, and then I did hold for this low, which I did talk about. That is where I bought back the last contract. If we zoom back out to the 15-minute, it did take out those relative equal lows that we talked about. And I just encourage you guys to watch this video 2-3 times just to really ingrain it in your head, the framework that I used here for this turtle soup entry. So that's going to be it for this video. If you guys want a continuation of this series, let me know down below and I will continue it. I'll catch you guys in the next one.